Here in 2025, we are seeing gold do something we've not seen before in history. It's the great decoupling of gold, and I'll explain 3 different factors that play a role of which gold has decoupled from. Let's talk about it as we explore. And there's good reason why this is happening, at least in some aspects, but there's other areas where it does boggle the mind to a degree. But gold is one of those metals that stands the test of time, and it is now making history yet again. And I'm not just talking about the price of making a new all-time high when adjusted for inflation either. But gold is a metal that I continue to hold and to buy, although I have to be a little bit more careful these days. But when I do, I like to shop at Summit Metals, not just because they're a channel sponsor, but they've been proven to be the low-cost leader for fractional gold eagles. But there's other gold products they have as well, too, with some very competitive pricing here. Now, I'm going to be referencing, in part, an article here from Forbes that talks about the paradox of what gold has been doing. It's essentially separated, and I'm going to talk about 3 of those different things. But when we think about the basis of price and, to some extent, value, we think about supply and demand. That's what we're taught in basic economics. But then we're told that the markets are near perfect pricing mechanisms, so prices are generally right unless the market has missed something or it is manipulating the markets, and that happens in commodities in general. So can we take that as a given? Well, you'd have to be quite the contrarian to believe otherwise to any significant extent, but there are exceptions to every rule, as we know, and investors are always hunting for such anomalies to profit from eventual returns to efficiency. But when it's all said and done, no one can predict the future, or else they'd be very rich. But we have to consider another foundational investment type of idea, even though precious metals like gold should not be seen as investments, but there is a mindset that does couple that. Precious metals should more or less move in sync. They should track rising and falling in tandem. While their relative prices may shift, these changes typically show some continuity. Their preciousness drives the correlation more than their utility. And even if their use cases evolve, they should still generally move together over time. And indeed, we've seen that to be the case between gold and silver throughout much of modern history, and we've seen them kind of relatively move together. There's obviously areas and times where they do separate, that's decoupling, but nonetheless, they do kind of come back around. And so that is an interesting thing, but we've seen it separate. We've seen it separate pretty greatly here, especially in the last couple of years, hence the wide gold to silver ratio. And we've seen that happen with other entities as well, and I'm going to look into those and talk about those in a moment. But first, let's talk about gold versus silver. That's right. Silver is the one metal here that we're going to put here. This is the most obvious example for most of us. And this decoupling has frustrated many silver stackers, even though silver really has not done too bad when you compare it upon itself. And I'm trying to encourage silver stackers to do just that. But how was the ratio of 100 to 1 about where it is now? Stay there. But round the numbers to keep it simple. Historically, the ratio was about 5 to 1 at one time, rounding, and then 10 to 1, 20 to 1, 40 to 1, and now 100 to 1. So is it all just supply and demand? That's the question. But you think about it, what moved those ratios? 5 to 1 was about the mining ratio. You want to look at that as sort of the overall mining ratio throughout history. There were times when, the technologies were not there to be able to mine silver. It was probably just as hard to mine silver as it was for gold. In fact, some areas, like in Egypt, there was hardly any silver there. So the ratio was at 1 to 1. The 10 to 1 ratio sort of correlates with fixed ratios throughout history. And to some extent, the 20 to 1 ratio as well. it correlates to those fixed ratios when there was a bimetallic system or a gold standard. So that gives a little bit of perspective there, as they're not natural ratios for sure. They're manipulated ratios, at least up until the mining ratio, but the mining ratio has nothing to do with price. Annual gold production is around 3,200 tons, while silver production is approximately 25,000 tons. This gives us the current mining ratio, which is about 8 to 1. Yet gold is worth 100 times more. Well, in reality, that's what the price is. That discrepancy obviously raises eyebrows. And silver stackers cite this to argue that silver is bound to go to the moon eventually, catching up in value. But so far, that's not happened. But when we look at what happened with other metals, then we see there's a breakaway there too. So now let's talk about platinum versus gold. That's metric number 2. What about platinum and gold? Because rarity is not everything. When you got that 8 to 1 mining ratio and people saying, well, it should go to the moon, but what about platinum? Well, let's take a look here. Platinum, these two metals move together in direction, but not in value growth over the course of time. And now platinum being priced at roughly $1,000 per ounce, while gold sits above $3,100 per ounce, and $3,200 as I record this video. And now things get interesting. Gold's annual supply is 3,200 tons. Platinum is 180 tons. That's right. Just 180 tons of platinum is mined every year. And so look at that. That means platinum has just 6% of the new supply of gold, effectively a rounding error on the global scale, yet it trades at a third of gold's price. And so explain that one. There was a time when platinum traded much higher than gold. For actually most of the time, as being measured, that has been the case. Well, maybe not anymore, or maybe it's there's been enough time when platinum is traded less than gold that maybe it's not most of the time. But for a long time, it traded higher, much higher than gold, and and this is why even today we see, when you have a gold card, a platinum card is better. When you talk about awards, platinum awards, that's better than the gold awards. It's usually bronze, silver, gold, then platinum. Although now, platinum still is very rare, but it is about a third of the price of gold. And so, figure that one out. It's crazy. Talk about a decoupling. Global gold supply is robust, but platinum is tiny. Judging by price alone, platinum appears extremely cheap. So now we have a dilemma. The first thing is just to forget about platinum. And that's what most of you would say, probably. Just forget about it. Because gold reigns supreme. And that's true. For many of us here, that is. Now, I'm a platinum bull. And since 2020, I have really kind of decidedly to thinking that sooner or later platinum is going to come around. Now, it hasn't since then, and I'm actually surprised to some extent that it has not performed better than it has. Notwithstanding, I can understand why people would ignore people who say, well, platinum is going to surge in price soon. It may not. Or the second option is that platinum is undervalued and due for a massive catch-up. And I do believe that. However, I understand why most of you are going to go for option number 1. You could make the same case for silver. With only 8 times the supply of gold, why is it priced at just 1%? A gold to silver ratio of 100 to 1 seems excessive. Maybe 50 to 1 is reasonable, or even 20 to 1 like the old days. But 100 to 1 feels very much out of sync. Now, I've talked about ad nauseum why that's the case and why they're out of sync. And that's really the kind of thing that really has got to sink in with a lot of folks out there. In fact, it still has to sink in with me, and I've articulated it many times. Gold at 17 times the supply of platinum and just 3 times the price is unquestionably strange. Based off the supply-adjusted valuation, silver should be $400 an ounce. and platinum around $56,000 an ounce. Of course, those numbers are fantastical and won't be realized, but they highlight the massive underperformance of other precious metals relative to gold. Either silver and platinum are dramatically undervalued or gold is drastically overvalued. If prices revert to the mean, whether through gold falling or the others rising, the moves would be dramatic. For precious metal bulls, that supports the case for higher silver and platinum prices down the line. However, I disagree completely with that last paragraph. And this brings in our third area of decoupling for gold, and that is its measure in dollars. It's decoupled from the dollar. Why? Because gold's nature has changed according to the markets and according to how it is being treasured and stored. It is being treasured and stored by central banks around the world. That has propped up the price, folks. This is why gold is reigned supreme. No question about that. Silver has only expanded in its uses to well over 10,000 uses. It is consumed, and it is also mined as a byproduct of other metals more frequently than it has been, even though mining production has only increased marginally compared to the demand. But that demand is not just monolithic. It's spread out between those 10,000 uses. And platinum is all but a commodity these days, and it is got really tight supply, and there's a lot of factors, and there's not many factors that could disrupt that supply chain to such a point that I'm shocked that it hasn't gone up in price. This seems like the most undervalued metal, even more than silver these days. But nonetheless, there it sits right around $1,000 an ounce, and less than that for most of the time. Notwithstanding, who knows what's going to happen? It's such a strange, odd thing with platinum. But I don't think that gold is grossly overvalued. Do I think it's somewhat overvalued? Yes. Do I think that silver is undervalued? Yes. And I think silver is more undervalued than gold being overvalued at this point. I think the most undervalued metal is platinum. Notwithstanding, I do believe that because of the way that those metals are looked at these days in the marketplace, that we're not going to see that dramatic shift like this article says. It's not going to be dramatic. However, I do think we will see the gold to silver ratio fall. And I think that no new normal is probably somewhere between 75 and 85 at this point. And a dramatic shift would be closer to that 75, based off of what is going on not only in the last year, but really for the last 10 years, as we're seeing here. So I think it's very fascinating how this is and what's happening here with platinum, with silver, and gold. But the decoupling is a very real thing. And I think that just goes to show you, folks, that if you are a heavy silver stacker and you have very little gold, I don't think it's a bad move to get a little bit of gold in your portfolio, because it's proven to stand the test of time. And unless these central banks just dump a whole lot of it very quickly, I think we're going to continue to see the gold to silver ratio stay higher than what you thought was and what I thought was a normal gold to silver ratio at one point in time. So therefore, I think it's a good idea to have some gold in your portfolio. I'm not a financial advisor. I don't play one on TV, but it's what I have been doing since 2017. Not abandoning silver. Hold on to your silver. Still buy some silver, but I think it's good to diversify with much more stable and growing asset, and that's gold. Even if the price were to come back and normalize to a certain level, even if we've reached the top for gold for the next 5 years, I still think it's good to have some gold because it's a protection against economic instability, and that's what it's about. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.